Hey guys, can everyone hear me and see clearly? Okay, great. Thanks so much, Daniel. So, how do I want to start this effectively so we don't go into too much detail, but it gets the gist of the situation? So, this morning we had covered a couple of things that were concerned. The first thing that we were looking for was the possibility of an open drive higher, and we got close to that type of open, right? Right here. But again, we had to consider that we were on non-farm payrolls, which means that everything out of the gate is going to be a little bit more challenging. Uh, if you'll look just the opening rotation, right, in the first 15 minutes, drove us from 76, right, almost all the way up to 84, which is obviously that's a normal range or a little bit under a normal range that we'd have intraday, and we got that in the first 15 minutes, right? One of the things that we were looking for that would give us a sign of whether buyers were in control or whether we were going to roll over to the downside was a, first of all, half gap, which was approximately right here, or if we had full gap. Let me see if I can pull this in just to drop. There we go. There we go. Let's try that again. Half gap, or obviously full gap. So out of the gate, they backside tested this zone right here, and then they pushed up. So on non-farm payrolls, obviously we discussed that we had a 30-point range prior to the open. Also, the strong possibility that we would have very wide ranges both up and down. And the way that I wanted to compensate for that particular, for the wide ranges was to have at least a minimum of a 10-point rotation. And what that kept me from was getting whipped, particularly in this zone right here, right? If I'd simply taken this zone the first time, I don't recall what the rotations look like in the first 5 minutes, nor am I certain that we would have gotten the 2-point rotation down. But what that kept me from doing is getting run over in this zone out of the gate. So we didn't quite get the rotation up to 84 at that point, but even with that, right, 76, 76 would have put me at 86 as the first location that I could have taken a trade. So I had no counter trade going. Also, paying attention to the 9:30 time zone, right? We usually experience reversals between 9:30 and 11 a.m. So all I'm trying to do while I'm trading is plug all these pieces together so I don't get run over. Um, and have to start digging out of my trades or putting myself in a hole in what would be normally a very difficult day uh, otherwise. So the next thing that we said is we were looking for 10 points. So if, let's just call it 83 and 3/4, right? That puts me at 73 and 3/4 as my first trade location. When I'm this close to the back of a zone, I just assume the back of the zone gets me there, right? And if you'll look, our first rotation down all the way through again, because we stretched out for 10 points, kept you from getting smoked in this zone. Now, if you had taken the back of the zone here, I'm not certain that this wasn't a 2-point stop again because the scales are so big. But either way, I just didn't want to get whipped around. If you waited for your 10 points, right, all the way down here, first you got your 2-point rotation quite easily. Essentially, all you needed is to trade back to the front of the zone. In addition, if you left trailers from this point, was it a sign of strength or a sign of weakness? Well, all we had done is pushed up after a significant gap up, and then it come back in to a midpoint retrace. In other words, half gap. And that half gap was, I believe, measured from the high back to the middle. I'm not going to take time to measure it, but I'm certain I had this as half gap, right? So if we're unable to push past half gap, it doesn't matter what the day is, non-farm payrolls or otherwise. That is a sign of strength to me that buyers are in control. Buyers came back in. We pushed up. They tried to push back down and reject this zone. We're unable to do so. Essentially, as soon as we traded back above this point here, above this zone, you had traders trapped. Everyone that was shorting below this point had to come back into their trade and cover. If you left a trailer, you never got stopped out on your 2 points. And why did this trade work? It was simply because of the stretch, right? Now, whether we were going to push up all day or not, that was hard to tell. And in order to reference this part of the day, right, how do we analyze that? We already had a rollover, but this is an unusual time of day to have a rollover. And secondly, you have to count in your mind, right, if it's non-farm payrolls, that up and down 10 points is pretty much nothing. As a matter of fact, up and down 30 points would have been totally acceptable. If you left the trailer with a reasonable stop, you already got your scale over here. It's unlikely had I taken this trade, and I got to tell you, I did not take this trade because I simply wasn't going to trade before the first hour was completed. But if you had left a trailer, obviously you had a potential for 10 points. It's unlikely I would have gotten that. I would have scaled all the way up through this point. Now, the next question is what if I shorted in this zone? Well, 72.5, right? If I did give it 10 points, would have put me back here at 82.5. It would have been a judgment call to take the back of this zone. However, if you look at this time of day, right, let's contrast this over here to NQ. So a couple of, before we do that, a couple of things were going on here. First of all, you'll notice as soon as we got out of this, out of the first hour, look at the rotations all of a sudden. By the time you got up to the zone, these rotations were incredibly small. Essentially, 2 points was all you're getting. And 2 points is a hallmark of a trend situation or a trend day up, even though obviously you couldn't call it a trend day at this point. But look at how the character changed from the rotation size here, where we were talking about, 62. We were whipsawing between 62 and 78, a 4-point rotation, to all of a sudden we had very tiny rotations. And essentially what happened here was OTF stepped back in. That's other time frames. Other time frame traders do not care about rotations. They don't care about zones much, and they'll keep a steady flow of money kicking in. Why? They're making decisions based on macroeconomic numbers, and they're simply taking positions all day long, and they're trying to move a very large amount of money. Slowly, they're feeding it to the market. They'll tend to move it on a volume-weighted average price is what they're trying to work in, so they can get an average price through the course of the day. And that's why these rotations disappeared here, right? And they disappeared all the way until you had more than a 10-point rotation into this zone, right? But even here, the most we were able to manage was from 84 down to 82. This still told you that buyers were in complete control. In addition, right, this was, while we did have wicks up on a 5-minute basis, this was the highest closing point of the first hour right here. Okay, this was the high trade, but on a 5-minute bar, this was the high close on the body, right? So either way, we were either going to try for a double top here, or we were going to try to, or you could have considered the double top from this point, right? But if you think about it, and they were going to roll over to the downside on a gap where we only accomplished half gap, the double top was unlikely to be a scenario. What would have been more likely, right, is they try to break above, and on this backside test right here from where we had this breakdown, this would have been considered the breakdown point. Okay, so this would have been our structure that I'm looking at right here. This bar would be the breakdown point, and I would have considered a retest right here. And you'll see we got the rejection right there as soon as we came up for this retest of this breakdown. However, the buyer stayed consistent and pushed up. You pretty much knew at this point the buyers were in control, and they remained in control for the balance of the day. Let's go look at that same time frame here from 9:40 into 10:30 real quick. And I used a tick chart for this. So let me convert this back to a 5-minute chart. Okay, so if we look at the same time when ES, right, I said I would key off of NQ, and we did come in, but a couple of key points. First of all, we were unable to get or even test yesterday's high, right? Half gap, I can tell you I measured it. This was exactly half gap on NQ. We came in and just tagged it. The 50% was actually a little bit higher, but I actually draw my half gap a little bit further back just to give myself a bit of a measure of safety. Okay, we rotated down to the zone below. We came nowhere close to Globex lows, right? This was Globex high that we rejected out of right in the morning. That was good, right? That gave a sign that we could possibly roll over. If you look at 9:30, right, where responsive buyers usually step in if we're rotating lower, and you could say we were making an attempt to the downside, right? So where did we know that they were in trouble here? Well, if you look at the same structure here, I don't know if you can see it because these trend lines, I'll get rid of them. Let me see how I'm doing on time. 22. I have a couple minutes still. So if I'm going to count this as my original structure, right? This took place over the first 45 minutes of the day. And if I'm going to count this as my original structure, this is the breakdown right here. So what I would normally expect somewhere through the course of the day is breakdown, retest. And you can see on this retest right here, they tried to push it lower and they were unable to do so. So where would the trap trade set up here? Well, all the people, okay, so I'm going to erase this so y'all have seen that clearly. Everyone that shorted here thinking that we would push back down from Globex highs, right? Once you were right here at 10:30 in the morning, everyone had to come in and cover this at this point. In addition, once again, look at the rotations down, and then look, once we started to make this turn here and we hit half gap, look how small the rotations back down got in NQ. So again, the same measure. We drove up. This gave us the possibility actually of trend day up, but we were so far extended, responsive sellers were able to push it back down. We got half gap, and this is a sign of strength every time. If I can't close below half gap, I at least want to be cautious. The next thing I said was normally I would look for a 10 to 15 point rotation, that I would push that rotation to 20 to 30 points instead. And if you look this push down, we pushed down from 35.25, actually 35.27. If I take down 20 points, that puts me at 35.07, and that's exactly where we got. Part of the skill of surviving these markets is being aware that we've expanded the range, and you have to adjust what you would consider your normal rotation, which for me on NQ is normally a minimum of 10 points. You have to push that out a little bit further. So keeping that concept in mind, 20 points. If we come in at 35.06, this pushes me right back to the back of the zone for trade location. So what I'm thinking here is, maybe that's not such a bad trade location, right? If I use my stop right here, but it's aggressive. Buyers are in control. They weren't able to get rejection on the breakdown retest. This is the first sign that we were starting to experience strength, right? This is the first place right here where shorts started to get squeezed. And you can notice all the way up through here, there are simply no responsive sellers all the way through this, and we're getting tighter and tighter. In addition, in the first hour, this is essentially what I would consider the first hour's high, right? And you can see right here when we closed above, they try to push it right back down, and we're unable to do so. This right here showed me that buyers were in control. So I'm adding in a cumulative effect of a bunch of evidence, right? So if we look, this occurred, and this push to new highs occurred right after 10:30. Again, NQ tends to lead. So let's switch back and look at what was going on with ES here real quick, because that answered the key to when you should have stopped fighting this at the latest. So if we look at that same time frame, here's 9:30, okay? NQ is already up here, right? And about to press new highs, right? ES is down here. You've got to remember, through this entire rally, going all the way back to at least August, I want to say, every time we've had an up move, there's only been a very few occasions where ES has dragged NQ down. The majority of the time, it's been NQ dragging ES up. So you have to reason that out, and I went over that in the morning, right, that I would be keen off of what NQ is doing. So when we're down here, NQ is about to break a new high. As soon as NQ broke a new high, look at the change in character, right? This is the retest right here, as we discussed, right? This is essentially the high for the first hour, at least the way I would measure it, right? And you can see that was retested multiple times here, that 82. So it was really down here that you knew we had a problem. And then the breaking, when we didn't reject immediately, or we failed the rejection of these 3 bars back up, that told you that buyers were in control. Again, if you use the rotation size of 10 points, it kept you out of trouble in this zone. In addition, right, this zone had been tested multiple times, both up and down. When I see a zone get whipsawed through in both directions, I pretty much nullify it as a place to trade. And the reason I do that is because clearly no one's respecting that, right? No one's defending this position on either side, and it becomes very easy to slip through. I also had said the point of the 10-point rotation, right, is that it would, in most cases, it should take me through the zone above to the next location, right? So I have a nice stretch. Even if you took the trade right here, right, I would have considered this aggressive because NQ was already pushing new highs and we were getting no rotation. However, it still paid you your 2 points. You had to get it right on the nose, right, if you took the right at the front of the zone. But you got it. If you didn't get it here, you certainly got it right here, okay? And then you had to know just to freaking get out of Dodge, because for the balance of the day, this thing just drove up, and it drove up exactly as it's supposed to. Trend day up, you have to consider this first touch. This would be, really technically, this would be second touch, trend day up. This would be the third time in. Also, even if you were short in this zone, count off the time of how long it sat in that zone. This would be 5, 10, 15, 20, 25 minutes right here, okay? Even if you'd shorted here, this would have been a minimal stop, okay? And the reason why I'm making this argument is not that you should have shorted. You should have seen clearly that buyers were in control at this point, but even if you took this zone, 25 minutes and you had to be gone. And again, I covered that in the market preview. As we get into the end of the day, and we can move this on down, you can see there was simply no rotations. Again, if you had shorted this zone at the front of this zone right here, we really I'd really had to consider this my basing point, which would have meant that if I was considering this my base or this my base, either way would have been fine. That 782 would have pushed me to 1792 at the earliest, and I probably would have been measuring off of this 25-minute base right here, which means I was at 1785, would have pushed me to 1795, would have been my trade location, and we fell just a point shy of getting up to that point. So again, I would have avoided this area completely based on the price action, the lack of rotation, non-farm payrolls day, buyers clearly in control above the first hour's high. All of these things, if you add these clues together, guys, will keep you from getting blown up in your account, right? Make your days a whole lot less stressful. And what a lot of people like to do is they imagine in their mind on a day like today, oh, we're going to roll over from here, right? We've all seen when we get to these high zones, it resists, and then we just get this massive tanking, okay? The reason non-farm payroll days are hard is because institutions don't think like that. What happened here was this. You had a hedge fund manager, mutual fund manager, whatever you want to call it, okay? And right about here, into the first hour, they looked at the macro, whatever this number represented, they analyzed it for the first hour, they weren't doing anything. And these guys tend to come to the same conclusion. They're sheep, just like we're sheep, right? That's why we're constantly making money. It's because we're able to take the contra of these trades. So they all had time to analyze, have their meetings, and then what happens is they have a set of traders. Traders at mutual funds and hedge funds. Okay, there's 2 classes of traders. The class of traders that these guys are when you're working for institutions such as mutual funds, pension funds, and some very large mutual funds is the guy comes and he says, I want to be long the S&P 500, I want to be long the NASDAQ. I have $1 billion to buy, let's say, right? Thousands and thousands of contracts, and he gives the order to his trader. Now, this isn't a trader like you and I are a trader. His only job is to process that trade in an efficient manner through the course of the day. And that's exactly what he did. He started dollar cost averaging over time, okay? And you get moves like this. And when we're used to taking the contra trade, right? Or we're used to getting this action right here where we get trades down to get our trade location, right? Well, we lost that through the course of the day. And the only way to have captured it was to know this was going to be a reversal. Secondly, where a lot of traders make mistakes is if you had kept a tight stop. Let's say you shorted here, right? Thinking we're going to roll over. and you had a tight stop, that is being defined as anything less than really from here to here, 3 points, right? You needed a minimum of 3 points to survive this. And most of us aren't trading, right? Most of the time when I suggest someone use a 2-point stop, 4 points from the front of the zone, most people are freaking out at that, right? The majority want to trade it with 2 points or less. So everyone's getting stopped out here, right? And getting frustrated only to watch it roll over. Emotionally, you're probably pretty upset at this point because you just missed essentially a 10-point roll. So what do? You say, I'm not going to miss the next move to the downside. We're making a series of higher lows. As soon as it rolls up here, I'm going to short this at the front of the zone, or if you're not using zones, whatever you're using, some method of retrace, right? Breakdown, retrace, and you're seeing the size of these rotations. So you go, I've got it this time. We're going to come back in and fill the gap. And you get smoked again and you get stopped. This time maybe even you used a little bit wider stop to account for the size of this trade. This is how small traders get blown up because they can't take all of these little facts and add them all up together, nor do they adjust for the size of the rotations, right? And they just end up getting crushed. So that's my point of view from my experience on how this day went. I did try to play this day for a rollovers to the downside with options. I lost all the way around. It wasn't a big hit. I'm down less than 3% for the day in my options account, which is totally fine. 10% is my max that I'll let it go down, simply because when I hit it, I hit them big. At any rate, that's what I got. I hope this helped out. I've got a client I need to jump to, otherwise I would take questions. If you have any questions about this, feel free to welcome me at tradingperform@gmail.com. Even if I can't get right back to you, I'm happy to address them in the next session over. And I certainly hope this helped y'all out. If you lost money today, don't sweat it. Never draw down more than you can make back in one day. That's always been my philosophy. Okay? And the other part is it's just a trade. It's just a day. And I want to leave y'all with one last concept, right? These huge days, everyone slobbers over them, right? Everyone thinks that somehow you're going to capture the bottom and roll all the way up to the top. But if you take the majority of these days that trade like this, A, they're very hard to get entry. This was a huge rotation down, right? And this is a huge rotation up. So whether you were betting on this move back down to the downside or this move back to the upside, it's very, very hard to hold the move all the way through. And the reason for that is because as soon as this rotations collapse, right, and we go back to days that look like this, okay, those same traders are pulling their hair out and they're consistently losing money through this entire process. Why? Because they have a trade, they let the trade go all the way in their favor, then it rotates all the way back. And then what it does, because it usually turns into a balance situation, right? Pops right below, stops them, and comes right in. The hallmark to being a consistent trader in ES, right, is identifying where the potential traps are and where the potential counter rotations are going to come, both in terms of time, rotation size, right, and then key support and resistance levels, which are what the zones serve as, right? And so I may have been off a couple of ticks right here. It might have been 94 and 94 instead of 94 and 3/4, but I was pretty darn close. It's a lot harder to get these zones when we have such wide ranges. And I was calculating everything from 1704 all the way up to 1820 in terms of zones. So occasionally I miss by a drop or two, and I may have missed this zone just by a drop, but it made no difference. It was straight up. So I hope that helped out, guys. Have a great weekend. I hope everyone made a lot of money. Monday, Tuesday, and Wednesday were fantastic for me. I gave back approximately 3 points, I think, yesterday. I gave back a little bit in my options account, but nothing on my ES trading account. And most of my coaching clients, guys, y'all did a great job this week. No one took a big hit. That's fantastic. And most of y'all had a fantastic week. A couple of y'all did really well. Y'all did take the trades down here, right? Both here and from this location right here. Was that the 10-point rotation? That's correct. Right from here. I don't know if anyone did anything here in the afternoon. I certainly didn't. And I hope everyone made money. Anyone can trade profitably. You just got to slow down enough and discipline yourself to trade within a set structure. Have a great weekend, guys. Talk to y'all later.